Hi everyone, welcome to the first episode of what will be my weekly series on YouTube called Call for the Week. Now, this is a series which I am starting after deliberating about it for a long time because once I started, I wanted it to continue on week and without any gap. So, in this, what I'll try to do is that I'll try to cover aspects of the stock markets, how they are likely to behave over the next week, what are the factors which affected the markets last week, and the factors which are likely to affect the markets this week, and the overall setup in which we find the markets for the medium term as well as the long term. Now, since this is the first episode, just to tell you something about myself, I used to be head of equity at SBI Mutual Fund, Chief Investment Officer at JM Financial Mutual Fund, and now I run my own advisory on www.asksandipsabharwal.com. I've also got a blog there, which is if you put a slash after asksandipsabharwal.com/blog, you get my blog on which I write detailed articles on the economy and the markets. Now, as we enter into this week, we are around 1 month off from the election results and the exit poll results, and that's a thing which is taking a lot of people's mind space. So as I talk to a lot of investors, what I find is there is a great degree of skepticism. People have kept cash, a lot of cash. People are trying to cash out because they are afraid of the outcome, and which is normally a good thing for long-term investors who actually want to invest, because more the skepticism, more the cash on the sidelines, the better is the performance likely to be over the long run. Now, last week was a curtailed week. There were just 3 trading days. Markets moved up in the initial part of the week and gave up some gains later on. It was very similar to what other emerging markets did, and what people who watch the Indian markets, they need to realize we are part of an overall emerging market basket, and our performance cannot be delinked from what's happening in other emerging markets. So from the beginning of this year, what we've seen is that some markets like China, Hong Kong, Brazil, etc. have done very well. In fact, the Chinese markets are up nearly 30% this year in the first 4 months itself. But this kind of performance is unlikely to sustain, at least the pace of it is unlikely to sustain. And what we might see is that a bit of correction in emerging markets could happen over the next few days and weeks, and as that happens, we should also see the Indian markets also give up some gains over the next few days. So what I think for the next week is that markets are likely to be sideways to negative. They might start up because the US markets ended up on Friday, but we could see some gains being given away because the markets look slightly overbought in the absolute near term. US markets ended strong. We are seeing continuously good results from US corporations. JP Morgan reported good results from the banking side. PepsiCo reported good results from the consumer side. So the US economy seems to be reasonably healthy, and that's something which will be helpful for global markets, because that's obviously the mother market, and as US does well, we see other markets also do well. Specifically for India, we are seeing and for other markets also, the result season is on right now, and result season typically has influence on individual stock movements. Last week we saw results come out from Infosys and TCS. They were totally contrasting results. TCS reported strong numbers with a strong outlook. Infosys reported reasonable results with a dicey sort of outlook, where they are really unsure of what the near term is, and profit growth for this year will be 0 to 5%. And I believe that Infosys, being a very overowned stock, we'll see some more correction come through, because for a company with the earnings growth of just 3-4%, trading at 20 PE is very high despite the kind of cash they generate. And we'll see TCS continue to do very well, because Wipro also reported pretty normal results, so the greater interest will shift to TCS once more. The other big companies to report were HDFC Bank and Reliance Industries. HDFC Bank results were impeccable as they have been. Their growth has picked up after they went slow for a couple of years in between. Net interest margin, net interest income grew by around 22%, which is very healthy for the size of the bank which HDFC Bank is. And earnings growth was also 22%. Net NPAs are well under control. So then one can argue that HDFC Bank is owned by everyone. How will it give returns to investors? Well, if earnings growth is there, then we find that new investors come into such high growth companies, high quality companies, and that drives those stocks. And we'll see that happening with stocks like HDFC Bank also. So there's no reason to believe why it will not continue to be a wealth creator. The other big result was Reliance Industries. It was a mixed bag. Reported results were good, but out of their four main businesses, we are clearly seeing stress or probability of not very great results from one of them. Only the retail business is actually firing on all cylinders. Now the big concern I have is on telecom, because they have invested around 1,50,000 crores in that business. However, net profit is not going above 800 odd crores per quarter, and it's a business which requires continuously high capital expenditure. For that kind of investment with 30 crore subscribers and record high operating margins of 40%, if this is what they can deliver, then we need to be concerned, and a couple of years down the line 5G investments will also kick in. So I think the positivity of Geo has largely got factored in. Refining is a business which over the long run will see a decline as more and more electric cars come in. So that's where a huge amount of the investment is built in. So Reliance overall, given the results and outlook, I think from here for Reliance to outperform is going to be very difficult. In fact, I think Reliance could give up some of the gains and will be an underperformer over the next few months, unless and until some asset monetization, where rumors are going on that some companies putting money in refining or some companies coming into their Geo assets. If that happens, then we have to reevaluate. But as things stand now, I think things are not looking as great from the stock point of view. Other news-making sector obviously is aviation, where we are seeing Jet Airways has closed down, at least in the interim. So indirectly SpiceJet and Indigo are benefiting. The ticket rates have gone up substantially right through the festival and holiday season of May, June and July, which will clearly benefit the incumbents. Now we need to see what the resolution process will be, because X of that, the competitive intensity will reduce significantly and all of us will have to pay significantly higher ticket prices. And that's good for the shareholders but bad for the consumers. So let's see how that entire news flow goes. As we move closer to the end of the election, there could be some jitters in the markets, and that's something which long-term investors need to factor in for. Overall, 2019 I still believe is going to be a very great year for equities. We've seen some sort of gains in the first four months, but I believe a substantial amount of gains are still left. Markets will still deliver at least 10 to 15% more in terms of broad large cap indices for this year, and the mid caps will outperform. There are significant contrarian opportunities which continuously come up, and that's where investors should be focused on. One sector which I think is clearly coming out of a phase of consolidation and will do very well is cement, because demand growth is strong, supply additions are slowing down, and pricing discipline has come back to the industry. And it's an industry which has very high operating leverage. So as prices move up, it directly flows into the profits. So I think it's a sector which was very highly owned 2 years back, and it's now very less owned among large institutional investors. So people will keep on buying, and most of these companies are unlikely to raise fresh equity. So to that extent, the equity supply is limited, and this is one sector which should do well. So overall, as a synopsis, I believe that markets are in a phase of consolidation. This phase of consolidation will continue for some more time before it gives way to a strong up move. Now, how will the overall election results impact the markets? Unless and until the current incumbent government actually loses, I don't see a correction. There are views going around that even if NDA comes in, the markets will fall by at least 5-7%. I think it's humbug. Nothing like that's going to happen. Markets will rise substantially if Narendra Modi comes back as the Prime Minister, and that's something which investors need to watch out for, because skepticism is high, cash on the sidelines is high, and all of that needs to be invested. If by any chance, which is a very 10% probability event, there's a change in government, then markets will correct by at least 8 to 10%. But I would think that I would put a very low probability to that, and people shouldn't build investment scenarios around that probability. Now, with that, I'll end the first part of call for the week. For those who want to look at my longer term views, like I said, you can visit my blog on my website, sandipsabharwal.com/blog. Anyone who's interested in my advisory plans, which are doing quite well, again the website remains the same, and we have plans for investors, traders, short-term, long-term investors all across. So those of you interested can visit that. I'll see you back next week. So bye for now.